Quite a morning. Our markets, of course, did quite the U-turn on Tuesday after those record levels. Yesterday, fortunately, was a holiday.
Yeah.
We're coming back this morning with Asia looking relatively muted, but there'll be lots of focus on what happens locally.
Right, absolutely. Given the fact that we haven't really seen too much of a reaction when it comes to the outcome of the FOMC, and besides that, we're continuing to see earnings, and they're all mixed, but mostly positive, more positive than negative. I reckon that a lot of these factors will eventually play out and our own markets and have that impact coming through.
Indeed. Let's do a quick check of what the implied Nifty looks like this morning. Remember, we've come back after a midweek holiday yesterday. Implied Nifty indicating to flat to slightly higher start. Cues coming in from Asia are not very strong, so most of your Asian markets are trading flat. You've had the Japanese yen, which has been a talking point as well for the last few weeks, gaining about 3% on back of intervention from the Bank of Japan in the early part of this week, and more importantly, on back of the dollar giving up some of its gains. Well, like we said, the man of the week is the Fed chief. Key highlights on the much anticipated Powell-led FOMC decision. Benchmark interest rates were left unchanged at 5.25 to 5.50, which continues to hold at a 22-year high. The Fed has said that they will not cut rates until inflation is sustainably around that 2% target of theirs. Lack of further progress on inflation, economic outlook looks uncertain. That's what the Fed has continued to maintain. The Federal Reserve's policy statement on Wednesday was more dovish, and I think that's what equity markets took a little heart from in overnight trade at the margin than markets anticipated, with no hint of a potential rate hike. So remember, from the end of last year, we've gone from rate cuts to rate hikes to stagflation to inflation, and now going back to a potential rate cut as early as July. Well, Fed has also said that they would slow down the pace of balance sheet runoff starting as early as June, again more or less on expected lines. Yields on the 10-year has dropped 9.2 pips, which is the biggest drop seen on the 10-year since Feb this year. Gold has rallied about 1% on the Fed's move. Crude has actually declined quite sharply, maybe to do with dollar weakness, and also, of course, the fact that U.S. inventories have continued to see a rise. Along with that, the Fed chair also ruled out any sort of concerns on stagflation. Remember, these were questions coming in from the media that was also present, taking the best of the opportunity to understand what the Fed's dot plot looks like. But for now, it looks like no rate cuts, no rate hikes, and also no rate cuts until July. And in terms of important data that came out, labor cost has actually risen in the U.S., and that could be viewed as slightly negative, at least in terms of inflation. That was the Fed, and that was crude and gold, and Asia clearly not doing too much in early morning trade on back of that. But of course, markets weighing every ounce of what the Fed chief said with caution. Citi, of course, put out a note saying that largely in line with what the street was expecting. The fact that it was less dovish than what the margin of the market was expecting is what could be responsible for a little bit of calm across global equity markets. Couple of other things. It's going to be earnings heavy for the U.S. The likes of Apple will be reporting later on in the day. You had Cognizant that reported post-market hours. The stock was up 4%. Usually Cognizant is important in context of what happens in terms of IT spends. The numbers were largely below were not very strong, but they were better than what Cognizant had guided for, and that's what the company took heart from. The stock was up 4%. Top line was on the higher band of the guidance. Headcount has continued to reduce. Client wins also remain slow. But then again, the stock did react positively, and that's what we're looking at. That could have an impact on IT stocks back home, but there's so much more than just IT stocks back home. You've got earnings, you've got auto sales, you've got Kotak, you've got Godrej, and the list is extensive. But the benchmark was very interesting on what happened on Tuesday.
Yeah, I was just going to say add the expiries to that list, because it was quite a crazy expiry. The last 1 hour of trade was, some traders would call it insane. I'm going to tell you what's happened. So, it was, of course, the confluence of the Fin Nifty and the Bank Nifty expiry on Tuesday. And through the course of the day, all the way until 2 o'clock, it was absolutely flat. All the indices were consolidating, and suddenly at around 2 o'clock, you see a sharp surge upwards, taking out all the call writers, and then following that, in the next 1 hour or so of trade, you see a sharp decline, and from there onward, the Bank Nifty has fallen as much as about 700, 800 points from the day's high. Remember, the Bank Nifty was also trying to make a beeline for 50,000. But that didn't come through. So there is no doubt about the fact that these are choppy markets. There's a lot of indecision. There's a lot of uncertainty. And, well, for those who are very, very certain about their positions, well, in that case, profitability is not necessarily a guarantee for them either. Well, what are we looking at the moment? Last Tuesday, we did see the Nifty make a new high, but it also came off from that day high and from a life high. Well, at the moment, we are looking at the Nifty sitting at around 22,600. We have a little bit of a base being built around, well, 22,450, 22,500. That's where we're seeing an immediate weak support of sorts. And should we see the Nifty break that in today's day of trade, well, again, it's going to turn out to be yet another very, very choppy expiry. And of course, today is the Nifty weekly options expiry. On the higher end, we're keeping an eye on short. 23,000 does have a lot of accumulation, but I reckon that, that's not the mark that we're going to watch out for today. We're going to keep an eye on 22,800 because that's where we have a significant amount of well, writing coming through. And remember that Nifty's new life high is just about 17 points, 17, 15 points short of the 22,800. So 22,800 will be a significant well, resistance zone at the moment in today's day of trade. But should we actually break that, you never know. You may actually see a lot of short covering as well. Well, in general, what has also aided the markets was that fundamentally we've seen inflows from FIIs and DIIs, and both have bought stock worth well over 1,000 crores on a net basis. Not a very large number, but the fact that institutions are buying both foreign as well as DII, that's a positive. In terms of some of your other key metrics, if I look at the Nifty put-call ratio, that's at a fairly neutral range of around 1.11. And the FII long number in index futures stands at around 52%, which is also very, very neutral. So there certainly is going to be continued indecision. And remember that we're heading into the next phase of elections. So it's not just going to be about earnings, but also elections, and it's going to lead to an increased choppiness. And the premiums, the option premiums speak for themselves. But again, we're going to keep an eye on the 400-point range today because it's also the Nifty weekly options expiry. And well, those are the levels that we are working with.
Agam, while it's going to be volatile, let's not forget that in every election year, the month of May has actually done spectacular returns for the Nifty. So you go back to the previous election years and you've seen how well the Nifty has actually closed out for the bulls on the street. And interestingly, it's Bank Nifty that actually even outperformed the Nifty further. And we saw that trend. In the month of April, Bank Nifty outperformed the index. In fact, 3 months on a roll, Bank Nifty's actually outperformed the benchmark itself. Even in the month of April, not just comparing to the Nifty, but Bank Nifty has been an outperformer as compared to most Asian markets and most of Wall Street as well. On the 30th of April, which is on Tuesday, after it did a big U-turn, Bank Nifty did actually make a new record high of 49,974. However, it was profit booking, like Agam said, in the latter part of the session that led to the decline of over 500 points from its high, causing it to actually end slightly lower. It was volatile and we can't take that away, but the fact remains that records were made and the markets are looking comfortable. This could be par for the course is what I would have imagined. But nevertheless, we've got with us the big talking point this morning is the Fed and the outcome of that much anticipated Fed decision.